Welcome back to another day of charting. My name is Justin, and today we're going to be talking about how the stock market is so scared. Why? Because we're going red. Oh my goodness, we closed red for the first day in quite some time. Keeping this in context again, Apple took 11 steps forward and 1 step back. Oh no, that is so scary. And the question for today is, do we buy the fear or do we sit on the sidelines? Do we short this or what do we do? What we want to focus on today is going to be the monthly charts because as of right now, we are set to close on highs on every asset class, Bitcoin, Ethereum, QQQ, SPY, take your pick. Why? There is no alternative. And in terms of today, we had OPEX. On a Wednesday, it's usually red. So no surprise, we got a red Wednesday today. It's called Wednesday. And tomorrow we got OPEX for the quarterly expiry. And then we have Friday expiry too. So what I want to try to explain today is going to be whether or not anything has fundamentally changed to the thesis here. And I intentionally chose this chart on purpose and put a big red arrow because I think the people are just so scared. They're so scared. And I don't really understand why. I think what people are actually more scared of is the FOMO of why did I not jump on the gain train earlier? Why did I not recognize the warning signs earlier that the market was actually bullish? Look, we're at 53. If you're scared, the market is not. So do you want to be left on the sidelines as we continue to go higher and you don't make money? So I really appreciate some of the comments that I saw for people who are new to the channel. And also really appreciate that people are looking for an alternative view to the always bearish rhetoric of perma-bear. I heard the same thing in March of 2020, heard the same thing in November. And the view is that if you are betting with the herd, you're likely not going to make outsized returns. So the fact there's still some bears who are loud and proud actually gives me confidence that there's still legs to this rally. So the point for today, and again, we're going to delete this now. And the reason why I use that title for today is because look what happened into the close, right? This is a 1 minute chart. I almost never look at a 1 minute chart, but if we're so scared and we're bearish, why can't these bears latch onto any headline? Why? We just keep winning. The bulls just win. It's so easy to win right now because these bears are so clueless and they come screaming and shouting when we are literally right on support. Here's what I want to point out. So we're going to look at some higher time frame charts in a minute, but I just want to walk you through a normal day because what's actually really curious about today is that there is a significant news event in terms of Vladimir Putin, where again, this just crossed about an hour ago, maybe a little bit less. Putin is misinformed by advisors on the war, White House says, right? Persistent tension, blah, blah, blah. It's because he's ill-informed. So what that tells me is that we moved higher on the hope of having resolution or peace yesterday, and we went up by, how much did we go up by, right? We went up by about 1.2%. And today we're down by 0.6. So what is that? Again, it's roughly what Apple did, right? We took 2 steps forward, 1 step back. Oh my God, that's so bearish. We took 2 steps forward and 1 step back. Yes, that's exactly what happened. Go up 1.2%, come down by 0.6. We're also looking for a gap fill. So if the gap isn't filled, this is actually perfectly healthy. What I also just want to point out here is that on any normal Wednesday, it's normally red. Why? Because of options. So on any normal Wednesday, it is normally red. This week is very different because on Monday, Wednesday, Thursday, Friday, we had expiries this week. Only yesterday was the non-OPEX day. There are huge spreads at 460 to 462 for today, for tomorrow, and for Friday, which means they're scraping the chains. This pink line right here is a pivot point. And what I want to point out is that if we're buying a strong stock, what we want to see is that it's acting strong around a pivotal point. For me, that's why this area is pink. So we got a pink area because all the way back here to our January 10th low, right? We got 456.6. That's the exact low. What's the low on this move here? Oh my goodness, 456.47. Well, it printed like 13 cents below. So that's definitely bearish. No, it's not. It punched right back off of it. So on a normal day, this is exactly what I would expect to see. We didn't even get to a gap fill. So we still have roughly another, right? It's 455.9. Ish, right? 89. Here we got 0.47. So we still got about another 49 cents that we got to tick down to actually fill that gap, maybe closer to 60 cents. I'd also note here, look at the volume. They bought the close yesterday. They bought the close today. on Monday, Wednesday, Friday, we normally see an opposite hour into the close where whatever we get from 2 to 3 is the opposite of 3 to 4. So by ticking down from 2 to 3 and ticking higher from 3 to 4, that's exactly what we expect to see. Into yesterday, we saw buying. On Monday, buying. So we were kind of due for a little bit of a move down. I would also note this. It's important where we actually landed on the close. We landed above the opening price on the low from yesterday. The low here is 458.68. We closed above by not a lot, but enough to say that it's above, right? 3 cents above. I like it. Why? Because all the buying from yesterday, most of the buying into yesterday means that they're basically back to where they are break even, and they didn't sell. So that's really bullish. So at a high level, I am not seeing anything here. Whether or not we saw headlines of walking back all of the peace talks, whether or not any of that stuff happened, this is nothing. If you're scared, you are likely going to miss out on some of the best gains here. Why? If on good news, we go higher by 1.2%, and on bad news, we go down by 0.6. That's basically telling you that we should be buying the fear. Why? The stock market was fast and violent to buy that dip up, and it's holding. We're even higher here in after hours at 459. So all I'm trying to say is that, actually, let me just read the note here that I laid out. So I'm going to read the note. I'm hoping today's video is going to be a little bit shorter. We're already here at 6 minutes. So, again, part of what you're missing by only watching the public streams is that behind our group in Slack, I share a whole bunch of notes. And this is actually exactly what I was expecting today. You're also going to note there's a timestamp here. This is at 6:15 a.m. That's the Pacific time. So it means that this is 15 minutes before the market opens today. This was my game plan for today. By the way, I'm a bull. You can note that by my bull status here beside my name. So as a bull with a bull and bear case with key dates and a base case, I'm going to walk you through what I was expecting to happen today. And it actually did exactly what I want for me to remain long and to actually be looking to buy on weakness. So if we are expecting a bullish move and the bullish move happens, should we be surprised? The answer is no. Let's read this here and just see what it says. So the Bulls scored a touchdown. And what that means is that they made it all the way to resistance 3. So the Bulls scored a touchdown by getting to R3. And into the close, we just slightly got below 458.13. Actually, we're above it. We're even above that. So we're actually above last month's high. Whoop. So even more bullish. So again, the Bulls scored a touchdown by getting all the way to resistance 3, which means they got points on the board. By the way, the Bears don't have points. The Bears have a lot of work to do to get any points on the board. They got to get us all the way down to 441, 442. We got to drop by from where we are at the close. They get down to 441. These guys got to take us down by basically a limit down, 4%. Is that really going to happen between tomorrow and Friday? When into the close, there's any weakness, it gets to a key point, they buy it up hard. This rally right here is pretty big too. That's a 0.5% rally. Oh my goodness. Yes. So the Bears are getting nothing. They had the headline again today to do it. So reading the rest of the notes here, almost every chart has 3 white soldiers on the weekly. That is a reversal pattern, not a topping pattern. So what are we doing? We're attempting to reverse. And when we get a key pivot test and we bounce with bullish volume, that is telling us that the Bulls still have the edge. Why? They scored a touchdown. They're the winners. They're the winning team. So on a weekly perspective, closing at or near the high is bullish. Why? We got 3 white soldiers. And Aapl started 3 white soldiers and then went for a total of 11 or 12. That's super mega bullish. I'd also note here that we got a slight gap down within the range of yesterday, or a doji. And then, again, we have another tool that we have. It's called our end-of-day target. It told us exactly where we were going to go today, when we were going to go up, when we were going to go down. And here's the final point. So here I'm also noting that, again, we were set for an inside bar. We still have an inside bar on ES, by the way. So an inside bar, if we're going to stop going up, it means we need to have more than 1 candle or 2 daily candles where we print a lower low and a lower high. That is where we stop going up when we start going sideways. I can show you that here by looking at the chart. So, all right, just looking at the chart here, what are we doing? Well, we're still going up. So we're still going up. We're trending up. We got higher highs and higher lows until today. It was an inside bar, and technically, It's now a lower low and a lower high with a little bit of a gap left here. So if the bears are going to take control of the chart, first of all, where's the volume? They should have been overwhelming the chart to destroy it. It's Red Wednesday. They had a massive puts, about 1 million. They didn't get anything done. So again, tomorrow, if we are going to get another lower low and a lower high, that could be the start of a bear pattern. We would stop going up by breaking the uptrend, fill the gap, print a lower low and a lower high, and that starts a daily sideways pattern. Why? We go up, we go flat, then we go down. We don't just go up then straight back down. However, what's more important than the daily chart right now is the weekly chart. Where are we right now? Oh my goodness, we're still above the red line. We're invalidating the head and shoulders pattern, which means, does it really matter if we tick down a little bit more? Not really. Why? We've broken through the head and shoulders area. And unless we get an inverted hammer, where now we actually are closing below 454, this is likely going to be support, not resistance. So the daily chart is bullish. The daily chart has the potential to feed through to the weekly and the monthly chart. But here, what happened is pressure builds up. It got released. Pressure builds up. It's getting released. Where we're going to close on Friday, I don't know. But as of right now, we are closer to the high than we are to the low, which means it's still bullish. And tomorrow, we also close out the monthly chart. So what does this mean? Oh my goodness. We're invalidating a monthly head and shoulders pattern here. Really? Yes, really. And we're above last month's high, 45812. If you're not sure yet, this is all bullish. And the reaction is bullish. So when a strong stock is at the high of the week, at the high of the month, with multiple percent, right? We're looking at 11% from low to high. On the monthly chart, we got a bullish engulfing candle here. Sorry, it's not actually engulfing. Higher high, lower, higher low, higher high. So that's the start of a reversal. Just like we saw the start of the reversal on the bottom for SPY here with what? A higher high and a higher low. And then it did what? Went up a lot more. So the weekly chart tells us it wants more. The monthly chart tells us it wants more. There's pressure building up here. It should release into the next month. And April is also historically a strong month for charts. Sorry, strong month for stocks. Moving forward to here, again, we're inside resistance, which means the bulls are actually almost ready to score another touchdown by getting to 460 again. That is super bullish. So again, the notes here into Thursday close was already the high risk of a drop day. Prepare accordingly. Isn't that what happened today? Yes, there's still a risk of us going down into Thursday. It's what we said the whole time with our key dates here. Why? Again, quarterly rebalancing and options expiry, initial jobless claims this morning, and then tomorrow's the big day. On Friday, we got the big day. Payroll Friday, new month and quarter, EU-China summit. So I was already expecting this before the market opened. And when it happened, I wasn't surprised. What I was surprised by was how fast and violent they bought that dip up into the close. This was fast. Boop. So looking here, again, usually at 350 is when we start to see a big, massive move, right? There's the bear trap and boop, right? 0.5% move within 5 minutes. That's 0.34, 0.35 within 5 minutes. That's impressive. Bullish ramping volume. It's strong. So now, just to get a little bit of context, we're going to have a look at all the monthly charts that really matter for me. Let's look and see what these look like. So here on S&P, we're going to be looking at monthly charts, but also keep in mind, if we're at the high of the month, it also means we're at the high of the week. So S&P, basically at the high of the month over the previous top. Bullish. QQQ, right? Higher high, higher low, right near the high here. It's up by about 15% right now, as high as 16.5 to the high. It's battling for that high there. I would also note one more thing here. So on the daily chart for SPY, sorry for bouncing around, I forgot about this. So we closed back above the low of the day here. On QQQ, we actually did make it back above into the close. So that's also bullish because it means that we reclaimed the range on the low from yesterday. People who bought the close yesterday were red. They decided not to sell. So going back to the monthly, again, bullish monthly pattern here. So SPY is bullish. QQQ is bullish. We have a look over here at BTC. Also bullish. It's up by 9%. Nice. Let's look at ETH. Also bullish, up by 16. What else do we want to go up? Everything's at the high of the month here. All risk assets. This looks fantastic to me. So let's wrap up and just see what we have here. So tomorrow, again, let's read the note again. into Thursday, including tomorrow. Close was already the high risk of a drop day. Prepare accordingly. I think we might gap down, pump up tomorrow. Gap down, fill the gap, pump up. I would also note this. We've been talking about this a lot, but I'll just re-summarize it here. The quarterly chart. So I would actually prefer, if we're going to get a drop and fill the gap, that it would happen tomorrow. We could also do it into Friday. We're here again. Into the last 2 quarters, we gap down, pump up, gap down, pump up. So there's a potential we could do that too. Don't forget about that. But going back to here, Friday's the big day. But for me, the confirmation really comes next Friday, where if these 3 white soldiers we were talking about are actually bullish, it should feed through to more continuation. Why? 3 white soldiers is the start of the reversal pattern. It's not the end. So 3 white soldiers closing near the high of the month, the high of the week, means more pressure is building up and should release into next week. And next week will be the start of the new quarter and the new month. So that should give us the start of this candle formation back in 2018 and back in 2020. That's what I'm watching for specifically. If the gap down happens on Friday, I also won't be surprised. Looking here on why bull or bear. So there's every reason for us to be bearish, right? Yield curve inverted temporarily. And by the way, after we have yield curve inversion, Bloomberg today said that we usually go higher by 19% over the course of 9 to 18 months. Where are we right now? 459 times what? 1.19, 546. I was talking about 569 on 2 weekends ago's weekend deep dive. That's how we can get there. Why? Because no one believes it. Moving forward here, again, wheels are in motion, peak inflation, right? Peak cycle, inflation narrative. Yada, yada, yada. These bears are unable to claim control of the chart. Moving forward to our base case. TINA, the inflation narrative, right? It's still there. In the inflation environment, your best weapon is actually being in stocks with companies that have pricing power so they can raise their prices and raise their earnings. So again, we're going to test up to 454.05. Bulls and bears fight for direction. Bulls still have the edge. Let's look back and see what happened at 454. So over to here, right? There's the push over. So intraday, we test 454. We close at the high. We push it over. If this is the bulls and bears fighting, who's winning? There's lower wicks. We're pushing up. We're higher. And didn't even fill the gap on Monday yet. So are the bulls not still in control? I think so. Are they going to stay in control? Well, again, there's what's possible and what's probable. It is possible the bears take control starting tomorrow. It's possible we start to fade back down. I just don't see it as probable or likely. OPEX to quarterly chop. Isn't that exactly what we're seeing? But it's actually bears getting chopped up. And then into April, we get a relief rally on the quarterly chart and the move higher. So that is it for today. We're focusing on the high level stuff. And if you want to have more of a deeper review, come watch the Friday close live stream with us, where we're going to go through the market close for the last hour. It's already scheduled on the channel. And if not, there should be a video that queues up here in a moment, which is our weekend review for you to understand how we developed all these different things, like the base case, why bull or bear, the key dates, and all the notes I talked about. Thank you for watching. I look forward to seeing you tomorrow.